Yeah, thank you very much, Oliver. Good morning. A warm welcome to property and casualty retail business. Now, why is P&C retail business so valuable for Allianz? It accounts for 1/4 of the group operating profit, and the segment is one of the most important growth drivers for the operating profit with a CAGR of 10%. It's backed by a targeted combined ratio of 92.5% by 27, and that's a strong improvement of 1.5 percentage points compared to 24. In parallel, we will grow our volume base, but also our policy base, and we will do that without compromising profitability, and at the same time, we will reduce our expense ratio annually on average by 30 basis points, and this is net after investments into new technologies. You have seen it. We own the leading retail franchise in the industry, and our commitment is clear. We will grow it further, and we will do so even more profitably. On the left, you can see that our total P&C revenues reached 77 billion in 23, and the retail, including fleets and SMC, contributes 40 billion. That's more of 50%. Now, these numbers really position us ahead of our competitors, and the retail portfolio is a powerful stabilizer because it contributes, as you will see later, by the low combined ratio volatility to the overall P&C segment, and it's a value driver within the overall portfolio with this operating profit growth of 10%. Now, what sets us apart and ensures the robustness of our P&C retail business? We are scaling globally across markets, and that ensures stability and continuous growth in revenues, but also in value. We hold leading market positions and consistently rank among the top 5 in our key markets. Now, our retail global strategy is built on 3 main themes. Number 1, and I will elaborate on it, lead in technical excellence. 2, it's innovation, building on simplicity and best practices. And 3rd, leveraging on our ability to scale with our Allianz Business Master Platform. Now, on the following slides, I will lead you through the 3 pillars for our future success. Number 1, we are committed to further strengthening our technical excellence and resilience. Number 2, smart growth, driving the displayed policy growth uplift of 1% to 2% per annum. And 3, rapid productivity powered by GenAI and scale. Let's start with the first chapter, technical excellence and resilience. On the left, technical pricing excellence certification. We evaluate our operating entities based on the maturity of their pricing and underwriting excellence. And we've made progress with 35% of our GWP certified advanced or better in 2018. We have now reached 91%. We did our homework. We do not stop here, but we continuously raise the bar. 25 onwards, the advanced requirements will be further elevated, and ultimately, every retail portfolio aims to achieve excellence. Now, I would like to give you 4 examples to illustrate the impact and the significance of having a higher pricing certification. It's enhanced data granularity, and then it's AI automation for our pricing optimization and the risk modeling, and it's reduced time to market and more precise forecasts for our KPIs. Now, in parallel, we are focusing on claims excellence, and managing claims holds a substantial value creation potential for us. Here, 2 noteworthy examples from our overall P&C business. It's 1.4 billion of fraud savings and 2.8 billion of recovery revenues, both this year. Now, we are very proud to give you clear evidence that our measures in pricing, underwriting, and claims excellence are so effective to compensate and mitigate inflation. With our measures, we have successfully improved our underlying loss ratio from 69.3% in 23 to now in Q3, 67.3%. That's a reduction of 2 percentage points in less than 1 year. Our actions result in outperformance in our markets. And Germany stands as a prime example where our loss ratio in motor consistently beats market averages. And the same holds true for our combined ratio. We beat the German motor market in 23 by 5.5 points, and we expect that to do so in 24 by minimum 7 points. Also important in other markets, Italy, UK, Spain, Switzerland, just examples, we outperform the motor markets and beat the local combined ratios. Now, very important for you, moreover, in P&C retail, we have a visibly lower combined ratio volatility compared to our peers, confirming our technical capabilities in pricing and in underwriting. Apart from inflation, Nat Cat is an important opportunity for us, and we have continuously demonstrated a strong resilience. To be very clear, our exposure to Nat Cat is significantly lower than that of our peers. The evidence? During the last 2 major Nat Cat events, our share of gross losses was materially lower than our market share. Additionally, we have achieved a low Nat Cat and claims-related claims volatility, weather-related claims volatility. Despite the increase of frequency in these events, we were able to limit the average combined impact from Nat Cat and weather to 3.4%. How did we achieve that? Leadership in prevention, including warning text messages to Nat Cat. It's our Nat Cat technical excellence, including superior accumulation management. It's granular data for peril zoning. We have very detailed hazard zones and risk models in order to steer our business towards the lower peril zones and to optimize the local retention and the reinsurance. And last but not least, a multi-year forward-looking Nat Cat view is required to be prepared for future developments. We have additionally increased our Nat Cats by 1 percentage point since 2022, and we continuously monitor the trends. Let's turn to the second pillar, smart growth. Our smart growth strategy is engineered to expand our customer base, but also our policy count to reduce dependency on price-driven growth. What is new, especially with the new powerful digital tools and together with our intermediaries, we will expand the existing customer relationships, targeting more per capita contracts, and we want to build new relationships. Therefore, we have launched the Growth Marathon to attract new clients, to boost cross-selling, and to reduce churns. What do we aim to get? We will get 1 to 2% extra net policy growth each year, and each Growth Triathlon pillar will contribute 0.5 percentage points per annum. You will ask what's different this time and sets the Growth Triathlon apart from the past and our competitors' initiatives. In a nutshell, scaling the following assets that have proven effectiveness in selective markets now globally. And scaling means making them a standard. Now, in detail, we increase inflows from new customers and cross-selling. And by that, we will generate 1 percentage point higher volume growth per annum. And that equals an additional 1.8 million new business policies annually by 27. How will we do this? We secure to reach every customer with annual insurance checks, but also with data-driven personalized campaigns. Number 2, we will boost our visibility, amplifying the online presence of our agents and the end-to-end lead, process, and management. And number 3, we will utilize every customer interaction as a sales opportunity. We work on inbound calls and online services. Moreover, tackling outflows now at scale will also uplift our top line by 0.5 percentage point higher volume growth per annum, and that translates into 1 million additional policies annually by 27. The levers are behavioral-based communication to our clients. It is re-engaging with former customers. We know their profitability. It is safe desks with trained call center agents, and the incentivization of our intermediaries will depend on them achieving net policy and customer growth. Now, cross-selling is a very powerful tool, the most powerful tool. Why? Cross-selling increases inflows and reduces the churn at the same time. For example, we can halve the probability of churn if we sell a second product to a single customer, single contact customer, by 50%. Now, we have a huge opportunity in front of us with 60 to 90% of our clients holding only 2 or less contracts. Now, everybody talks about cross-selling, and I would like to demonstrate that we can access new customer segments and do cross-selling without cannibalization and jeopardizing our profit margins. And therefore, I would like to introduce to you Auto für alle. It's a German example where we, together with Allianz Direct, have launched an innovative multi-channel initiative to access all customer value pools in the German market. Because previously, we had only been successful with our agents in 55% of the market, the so-called convenience buyers and the service seekers. And now, with the new coherent product and pricing strategy and a harmonized shopping window, we have successfully extended our reach to the price seekers and smart shoppers. They are the fastest growing segments, and they represent already 45% of the market. The heart of our strategy is a joint market approach, displaying the direct and the traditional offer together. Now, the customers can save up to 18% switching to the self-service product, and this approach supports our agents in attracting price-sensitive clients and using the lower price but profitable self-service product as defense. And the nice thing is, at the same time, our convenience-driven clients are appreciating the services in the traditional products, are willing to pay for it, and that's confirmed by zero cannibalization. Now, we have visible success, materially outperforming by net policies gained and our combined ratio, and this is just an example. We pursue a similar approach in Italy, in Spain, in Netherlands, and in France. Now let me draw your attention to the third pillar, rapid productivity. Since 2020, we have a strong track record, and we continue to do so. How? The levers are process optimization, building on process mining, and broadening the use of robotics and GenAI-powered self-services. Number 2, it is organizational and system organization, and here we also scale now right-shoring in order to ensure efficiency and effectiveness. In parallel, we will also address our acquisition costs, for example, by exploiting scale effects in marketing and achieving a higher growth in customer journeys with lower commissions. Now, looking ahead to 27, we want to maintain our momentum and reduce our expense ratio on average by 30 basis points. And that's a strong reduction in times when inflation-driven price increases will slow down. And this is net of tangible investments into new technologies and growth. Talking about new technologies, a cornerstone of our productivity efforts is clearly generative AI, transforming our business along the entire value chain. And our use cases clearly demonstrate the potential for productivity gains from 10 to 30%. And on the next slide, I would like to present you an example how we are scaling AI. We have the ideal foundation to use GenAI for transformative outcomes. Number one, scalability. Number two, data expertise and treasure. And number three, technology along our harmonized products and processes, because we have a groundwork already done. In Claims Germany, we deployed 3 use cases. Automatic claims creation, it's the coverage and liability check, and it is the invoice check. And we implemented it in our pet insurance, pet health insurance, and we boosted right away the voice of the customer rating from 4.2 to 4.8 stars. And at the same time, we were able to raise the automatic processing share from 7 to 55%. Now, we will scale the use cases across all lines of business. And automatic claims creation is already live now in property and in liability. In motor and legal and accident, it will follow until year end. And by the end of 2025, all 3 use cases will be implemented in all LOBs in Germany. Other countries will follow. And we will leverage GenAI business capabilities also for other business functions, also clearly for life and health. Now, let me focus on our ambitions to conclude. We are targeting a 10% CAGR to reach 5.3 billion operating profit in retail P&C by 2027. And we will achieve this through the initiatives I've just outlined. Number one, excellence and resilience. We are striving for a combined ratio of 92.5, and we will continue to limit the combined ratio volatility. Number two, smart growth, growing the extra net policy growth of 1 to 2% annually, and rapid productivity. On average, annual 30 basis points expense ratio reductions are confirmed. Thank you very much for your attention. I have now the pleasure to hand over to my board colleague, Sirma Boshnakova. Thank you very much.